In today's discussion, we'll delve into the intricate maneuvers of Robinhood as they navigate the fallout from a short squeeze lawsuit, shedding light on their attempt to implicate several market makers, trading platforms, and brokers. Additionally, we'll unveil previously concealed failure to deliver FTD data for December, revealing staggering numbers. So, let's dive into the details. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But everyone remember, this is not a financial advice video. Recently, an article brought to our attention Robinhood moved to depose 7 brokers in response to a renewed motion for class certification in a lawsuit related to the January 2021 short squeeze. Traders who had initially filed a lawsuit against Robinhood for imposing trading restrictions in January 2021 have intensified their efforts for class certification. The plaintiffs, dissatisfied with the court's previous denial of class certification, are gearing up for another attempt to address identified deficiencies. What adds intrigue to the situation is Robinhood's decision to depose an additional 14 third parties, including the National Securities Clearing Corporation (NSCC), certain brokers with trading restrictions, and issuers of affected stocks. The brokers in the crosshairs are Apex Clearing, Axos, Interactive Brokers, TradeStation, E-Trade, TD Ameritrade, now Charles Schwab, and Merrill Edge. Robinhood is keen on understanding the rationale behind each broker's restrictions and the extent to which these restrictions affected a substantial number of customers. The plaintiffs argue that the trading halts imposed by Robinhood led to a decline in the prices of affected securities, contending that these prices initially reflected an efficient market value. They assert that any price decline resulting from the trading halt is solely Robinhood's fault, and the market values of these companies were not accurately represented. In essence, Robinhood appears to be shifting blame onto other brokers, market makers, and trading platforms. This strategic move by Robinhood raises questions about their perception of liability, potentially realizing the challenges they face in the lawsuit. The speculation arises that Robinhood might be anticipating a loss in the lawsuit and is proactively seeking ways to share the settlement burden with other implicated brokers. This could result in a collective settlement payout to retail investors affected by events such as the AMC squeeze and the GameStop squeeze, reflecting the true short squeeze values rather than values based solely on the January or June highs. Amp Biggums, a notable figure in the financial community, suggests that brokers, trading platforms, and market makers tend to turn on each other when faced with adversity. This prediction aligns with the current scenario where Robinhood is seemingly throwing other brokers under the bus. Meanwhile, Citadel, a major player in the financial world, is making strategic moves to address potential fallout. Notably, they have expressed interest in acquiring Credit Suisse's Chinese venture, potentially to safeguard positions and prevent adverse consequences. In a bid to maintain control, Citadel is looking to acquire Credit Suisse Chinese venture, a move that raises questions about their intentions and the potential implications for their operations in China. This development is noteworthy as Citadel has a history of facing restrictions in the Chinese market due to alleged illegal synthetic shorting. It seems that Citadel is strategically maneuvering to avoid being banned from the Chinese market and instead aims to strengthen its presence by acquiring Credit Suisse's Chinese entity. Shifting focus, let's explore the hidden data for December AMC FTDs uncovered by Frank's Place. Despite some missing days in the data, there are significant revelations. On the 18th and 19th of December, there were 26 million and 57 million FTDs post-split, equivalent to 20 million and 57 million FTDs pre-split, respectively. These figures are remarkably close to the all-time high FTD numbers of around 65 million. It appears that shorts still grapple with an FTD problem concerning an MC, indicating persistent failure to deliver on a substantial number of shares. The contrasting actions of Robinhood and Citadel paint a complex picture of the financial landscape. While Robinhood aims to deflect blame onto other brokers, Citadel is making strategic moves to secure its position amidst potential challenges. The intertwining dynamics of these players and the unfolding FTD situation with the MC raise intriguing questions about the future of the market. Adding another layer to the discussion, Boss Blunt draws attention to the Hong Kong stock market, which has experienced a significant downturn of 41% over the last 5 years. This serves as a cautionary tale, suggesting that the U.S. S&P 500 might face a similar fate if the current financial complexities unravel. In conclusion, the intricate web of legal battles, strategic maneuvers, and hidden data underscores the complexity of the financial landscape. As the narrative unfolds, the actions of key players like Robinhood and Citadel will continue to shape the trajectory of the market, leaving investors and observers alike on the edge of anticipation. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.